Today I'm going to share with you the best ICT power of three trading strategy that is guaranteed to make you money every single time within the market. And there's simply 5 steps to this. And if you follow all of these rules right here, you are guaranteed to make money. So let's just cover the rules right here. Step number 1 is accumulation. Step number 2 is manipulation. Step number 3 is distribution. Step number 4 is our entry, invalidation, and targets. Step number 5 is risk management. So let's just break this down all step by step so you can understand the rules in order and so I can simplify this for you guys. So right here, step number 1 is accumulation. And what you're going to find in the market is, we're either doing 3 things, okay? We're either accumulating orders, we're either manipulating liquidity, or we're actually distributing in price, as in price discovery, and we are trending either to the upside or to the downside, okay? So price is only doing 3 things. And step 1 is accumulation. And what you're going to find is we're going to have a range in price, okay? So right here, you can see that price has sort of created equal highs, okay? So, we've got sort of equal highs in, there's a lot of buy-side liquidity that's resting above these equal highs right here. And these are just the range highs, and vice versa for the lows right here. We've also got equal lows down over here. And step number 2, so once we've identified accumulation, we're simply looking for the manipulation of these equal highs and of this range, okay? So we're going to see a movement in price like so, manipulating above these highs right here, above the accumulation. And essentially what this is doing is enticing breakout traders thinking that this market is going to go long, okay? Because we know in order to actually get short in this market, the institutions need enough buy orders to match up their sell orders to actually move the market in the intended direction. So this is going to entice breakout traders right here. And also anybody that wanted to get short in this market too early, their stop losses are also going to be above here and they're going to be stopped out. So just think about that, okay? We're going to get a lot of buyers come into the market right here. Any early sellers are also going to be stopped out, which then provides the fuel and the liquidity for institutions to actually distribute this price in the intended direction, which would be to the downside, okay? So this right here is your accumulation. This is your range accumulation. This right here is your manipulation. So this is manipulating the buy-side liquidity. And then this right here is your distribution phase that we are looking at taking part in. Okay, we're looking for that short to the downside. In terms of our entry, invalidation, and targets, we're going to be entering around this area right here towards the top of the manipulation. We're going to have an invalidation above the manipulation, above the liquidity sweep, and then we're simply going to look to target around a 1 to 2, and then it's up to yourself, if you want to secure all of your position or leave a small amount to run, because a lot of these, can run, say, a 1 to 10 risk to reward. And then step number 5 is simply just risk management, guys. You need to ensure that when you're executing within this area right here, you know exactly how much you're going to risk if you do lose that trade. And, you're going to know exactly how much you're going to win if that does hit your take profit. So ensure that you are using correct and consistent risk management. And then vice versa, it's simply the opposite. If we're looking for longs, we're going to see a run of sell side liquidity below these equal lows right here. Then we're looking for our entry model around this area towards the bottom of the manipulation. Then we're looking for this distribution right here. So we're entering within towards the bottom of this manipulation. And then we're looking for this distribution right here. This is going to be our trend continuation play that we're looking at capitalizing on. And of course, invalidation below the liquidity sweep, target of 1 to 2, and ensure you're using correct risk management. So this is the ICT power of 3. Now let's look at some live trade examples so I can further break this down for you guys. Let's look at a live trade example right here. This is on gold on the 15-minute time frame. This trade was actually taken last week, literally on last Thursday, and let's break this down step by step. So we identified this accumulation right here. We essentially had the London range high and the London range low, okay? We were buy bias on this market. Therefore, our daily bias was only looking for longs on this market. So we've identified this accumulation. We're then looking for a manipulation of our range. Okay, we're looking for a run of this sell side liquidity that's resting below the London session low. You can see that's what we get right here during the New York kill zone. Okay, so this is during New York kill zone. We then enter on the break of that candle's high. Invalidation, okay, is below the liquidity sweep. And then we're looking to target a 1 to 2 and then further price discovery. Okay, we're looking for that distribution phase right here. So look, this is the accumulation. This is the manipulation right here. And now we're looking for the distribution in price to the upside. So we've seen all of the rules take place right here. Now we need to just ensure we're using correct risk management. So we're triggered in right here. And you can see so the trade plays on during Asia, okay? This trade absolutely smashes take profit for a 1 to 2 risk to reward. And then we got a lot of further continuation to the upside on gold right here. So this was a great buy example that was literally taken last week with all of the members within the premium community. The exact entries, the exact stop losses and take profits were all given to members. Now let's look at another trade example. This is also on gold on the 15-minute time frame. And what you can see here is we have accumulation of this range right here. So we've got buy side liquidity resting above this Asia session high. And we also have sell side liquidity resting below the London session low. Our daily bias is only looking for shorts on this market. Therefore, we need to see a run of this accumulation right here. We want to see that manipulation. Then we can look for the distribution to the downside. So let's play this on right here. You can see during the New York kill zone, we manipulate that buy side liquidity. Now we're just looking for an injection of bearish pressure, and then we can enter short with invalidation above the liquidity sweep, and then we're targeting a 1 to 2 and for some potential continuation. So let's play this on. You triggered in right here, and you're looking for some continuation to the downside, and you can see take profit was smashed for a 1 to 2 during the New York kill zone, and then we did ultimately get further continuation to the downside. So this is exactly how to trade the ICT power of 3. Let's look at one more live trade example on gold. So right here, what you can see, we've got the Asia accumulation. So we've built up this accumulation overnight during the Asia session. What you can see is sort of pre-London. We've run that Asia session liquidity. We're waiting for the London kill zone, and then we can look for our distribution phase. So right here is the accumulation. Right here is the manipulation. Now we're just literally looking for the distribution to the upside, but we need to get an entry during the London kill zone. So entered in right here, the London kill zone, enter on the break of that bullish candle's high, invalidation below the liquidity sweep, target a 1 to 2, and further price discovery to the upside. So our daily bias is, of course, longs, triggered in right here. Let's play this on. And you can see during the New York session, this trade smashes take profit, and we also got some further continuation to the upside. So look at this. Step number 1, accumulation. Step number 2, manipulation. Step number 3, distribution to the upside, ensuring we've got clear invalidation, clear targets, and we're using correct risk management. So this right here is the best ICT power of 3 gold trading strategy. If you haven't already, make sure to join the free Discord. The link is in the description down below for free analysis and to stay ahead of the curve with upcoming YouTube videos. If you want to work more closely with myself for my exact entries like the one shared in this video, then make sure to join the premium Discord. The link is also in the description for that. I hope you enjoyed this one. Thanks for your time, and I will see you in the next video. Take care, guys. Bye-bye.